moment. Click this. So thank you everybody for joining us for our joint webinar with EGR. We're going to go around the horn here and have everybody introduce themselves. I'm from Sterling Insurance Group and I am the marketing manager. Go ahead, Bill.
Bill Rigner. I am an account executive from Sterling Insurance Group.
And Joe?
Joe Haney, I'm the president of Sterling Insurance Group.
Corrine?
Hi, I'm Corrine Keon from EGR. I'm the international practice manager at EGR.
And Philip?
Philippe from EGR. I lead our credit insurance practice along with our transactional practice.
Thank you, everybody. Thank you for joining us. We're going to talk about the top insurance things you need to know when doing business in Canada. We're going to give you a little history about Sterling Insurance Group. Joe's going to go ahead and speak on us about that.
Yeah, just to give you a little background, Sterling, we started in 1996. We're a top 50 broker, or about top 100 broker countrywide in the United States, with 150 of this done. But we've grown since this has been reported with some new acquisitions. We joined the WBN because we saw a need for a lot of our clients with a global footprint to be able to get taken care of around the globe, and this has helped us quite effectively with some strong partners around the world. And this we'll talk more about that as we move forward here.
Yeah, so the WBN, Joe, do you want to touch more about that?
Yeah, it's you can go ahead, or Bill, but we can talk about it. It's the largest independent network of brokers and insurance consultants. So it takes the top brokers around each country in order to be part of the WBN. It's not a matter of just filling up a form and joining the network. It's a vetting process. It typically takes numerous years to be part of the network because it's usually the top brokers in each region or country for that matter. So where you might have one large company like a Marsh where they have one person at a location in Spain and another person in the United States. These are partner companies within these countries that are basically able to service and know the laws and all the ramifications of doing business in that country when it comes to any risk management or insurance.
So I'll start by introducing EGR. So thank you, Sterling, for organizing this webinar to discuss Canadian risk and the status of the market here in Canada. EGR, we are a fairly young organization, so we're celebrating our 6th year, but we are a consolidation of multiple brokerage firms in Quebec City, in the province of Quebec, apologies. And we've grown steadily strong over the past years. We are all located physically within the province of Quebec, but we are licensed to operate coast to coast in Canada. So we can service clients anywhere in all over 10 provinces and 3 territories. Those numbers are actually a little bit outdated now because we're getting close to almost 190 to 200 employees now in our organizations. As I mentioned, we've grown quite substantially over the past years. We are fully dedicated to property and casualty insurance, commercial insurance, and we do have a strong team, and Philippe's here to attest to this, but we do have a strong team focused on specialty risks. So we do a lot of surety bond, marine cargo insurance, trade credit insurance, which has some very strong particularities in Canada that Philippe will briefly talk about later on during our presentation. But we also have a strong expertise and knowledge with regards to executive lines, including cyber risk, which will touch base upon on this presentation. Unfortunately, there has been quite some major losses and events occurring in Canada in the past years, but especially in the past few months due to the COVID-19 crisis. We are, Julie, you can move on to the next slide if you wouldn't mind. We are solely dedicated to collaboration, respect, and integrity. These are our core values at EGR, and I thought it was important to point it out because they do align very well with what the WBN represents. And as Joe mentioned at the beginning, to be part of the WBN network takes a long vetting process. So it's not your everyday brokerage firm that actually gets to be part of this network. So when our clients grow outside of our boundaries in Canada and we need to reach out to partners across the globe, we know that the insurance brokerage firm we're contacting have been vetted. They are experts in their fields within those regulations in their own specific countries, and we can really count on their support. And it's same thing for when Sterling, for example, and or your clients are in need of Canadian support with their operation. It could be just on a consultative basis where they're considering maybe having operations in the country, or they currently have operations in our country, but never really focused on how to appropriately assess the risk. So that's one of our mandates here. And that's also the role that I play within EGR as the international practice manager. I support all of our clients that do have operations growing outside of our country, and vice versa, all the incoming new clients of EGR that have their corporate head office in the US mainly, because our two countries are closely knit together. So usually when we do have a business outside of our own country, the first country we tend to start businesses is in the United States. So we are firmly attached to your own economy. Julie, you can move to the next slide if you wouldn't mind. So today's presentation is to address the state of the Canadian insurance market and to give you an overview of what's currently going on in our Canadian industry with regards to insurance, and so also some particularities of what are the main differences between the Canadian and the US in terms of insurance. We could talk about this for hours. I'm just gonna end it. I'm quite passionate about it. So I'll briefly give you an overview of what's currently been going on. And it's very similar to what has happened in the US and actually on a global platform. It's not limited just to Canadian situation. So we are currently going through one of our most challenging hardening insurance market, where rates are on the rise and we have reduction in insurance capacity from multiple insurance carriers. This has started to happen in 2018, towards the end of 2018, and it slowly started to affect property insurance, not necessarily all types of insurance, and it really targeted some specific industries. But there were some early signs that the market was hardening, and 2019 was not didn't change this this effect. All lines of insurance have been drastically impacted. Primarily, I want to say it was an insurance rate status, so not necessarily reduction in capacity, but mainly a situation where rates were on the rise and premiums got more and more expensive. And unfortunately, losses kept on occurring either on the cyber events, which have multiplied over the past few years, but also, unfortunately, a lot of environmental and catastrophic losses in Canada with floods and windstorms, and also in the United States. 2020, we're almost at the end of it, has been a very challenging year for everyone, and not just in Canada. A lot of our clients now are facing a lot of increases in the premiums, but also reduction in capacity. And what we mean by that is clients now have to consider buying less limits of insurance that they purchased in the past. So they are retaining a lot more risk that they used to do. And it's sometimes because the price is just not justifiable to carry this limit of insurance anymore, or it's just that those limits are no longer available either on the Canadian and even on the London market, where we've seen a lot of reduction in capacity on that front. Key items to consider or to manage your exposures. We've seen success with our clients when we take proactive measures. So it's very important to have a collaboration with your broker, and your broker will carry this collaboration with your insurers, right? So when I talked about the values of EGR and also the values of Sterling and the values of the WBN network, you see an alignment there where being proactive and working in collaboration is the only way to succeed now. So without this, some insurers don't want to participate in those negotiations anymore, and we do find ourselves having to find alternative solutions for our clients. It is important also to consider that Now insurers more than ever will ask a lot of information. So unfortunately, it's something sometimes that we have to give back to our clients, where we do spend a lot of time with our clients understanding their business and going sometimes into the nitty-gritty details. And we need this information to prepare what we would call an underwriting submission to ensure that we are on top of the pile, basically, when we contact insurer, and that we present the risk at its most interesting and more clarified structure. There's a focus that needs to be taken also with regards to prevention and reduction of risk. So that can be in the form of property types of risk, so inspections, having the appropriate sprinkler system, but it also boils down to human resources, procedures for your employees. So it's either on the human factor, but also on your property side. And like I mentioned, revisiting your limit insurance requirements. Sometimes you can shift those requirements in terms of contractual insurance requirement. You can shift them back to your suppliers and or your clients. So when those are an option, it's something to consider, because ultimately then it reduces the pressure of you to have to carry those limits of insurance. Thank you. Now COVID. So the state of the market, regardless of COVID-19, wasn't great. COVID-19 added an extra layer of complication in the process. But before I talk about the impact of COVID-19 on the Canadian insurance market, I just wanted to give you a little bit of our numbers. Bear in mind, our economy is much smaller and our population is much smaller than yours. But the numbers are quite, I don't want to say scary, but they could be, right? So Canada's deficit prior to COVID was close to 20 billion. And at the end of this year, at the end of 2020, we're expecting our deficit to be roughly around 340 billion. So a major increase over here. And the government spent about 600 billion on COVID-19 at this present time. Our government has already informed via multiple press conferences that this is an unsustainable situation for more than 2 years. So the government will have to find solution instead of spending this amount of budget for more than 2 years now. They'll have to come up with some solutions. The reason why I wanted to present those numbers is because unfortunately it's impossible to imagine that this will not have an impact on taxes. So we are expecting a lot of tax increases in the next years, as many countries probably are, and this will have an impact with regards to insurers and also insurance premiums. So it's something to consider. Our Bank of Canada, our interest rate, our policy interest rate is back to the 2008 numbers. So we're down from 1.75 at the beginning of the year to 0.25%. And this rate is also important to consider because insurance companies do have a lot of restraint with regards to how they can invest their liquidity. So this demonstrates that unfortunately some interest, gaining some interest on your capital is not going to be an option for most insurance companies. So that adds a lot of pressure on the profitability of some insurers. Our COVID numbers, I just thought that I would give you some interesting numbers. Apologies. These numbers are from 2 days ago, but Ontario and Quebec are the two most hit provinces with cases ranging in 1,000 cases a day. They're the two most populous provinces, so it kind of makes sense that these would be the ones that are the most affected by them. We are under strict confinement in some parts of Quebec. So it's affecting a lot of travel. So that also has some restraint on insurance and what we can do with our clients in terms of loss prevention visits and all that stuff. So these are interesting situations that we need to consider. So COVID-19, the impact on the Canadian insurance market. When COVID-19 first started to be in the news, the first questions that companies had to close, first question that we had to address was the business interruption side of coverage. It's been in the news quite a lot also, and then it quickly came clear to everyone that insurance companies would not cover for business interruption coverage caused by closures of companies due to COVID-19. But since then, we've seen other impacts on the insurance, on the commercial side with regards to COVID-19, and most lines of insurance have been affected. Cyber, crime, trade credit, we'll talk in a minute, employment practices liability, and directors and officers are types of insurance that unfortunately I've seen a lot of pressure on. We talk about cyber and crime because unfortunately, same as in the US, cyber attacks on our health systems, schooling system, and financial institution has steadily been on the rise, but in the past few months, we've seen tremendous number of attacks on our systems, and it's triggering cyber risk coverage. Crime coverage, we mention it here because there's also the social engineering portion of risk, which you might have heard in the news where sometimes employees are included in those crimes, that they're voluntarily divulge information without them knowing it because somebody's impersonating either the government trying to gain access or sometimes another organization that's trying to provide you with information for COVID-19, but unfortunately you're being tricked into it and you're divulging a lot of information on your organization. Employment practice liability. In Canada, we haven't seen much claim on those, but the insurers I've felt the pressure of it. We've never faced this situation before. So employers don't always know how to react. They might take decisions that are preventing the spread of COVID-19 within their organization, but unfortunately were the wrong decisions. And these could potentially lead into claims against employment practices liability, and same thing with directors and officers. So it's put a lot of pressure with the insurers, but as of yet, we haven't seen any movement with regards to claims on those fronts. Philip maybe can talk a little bit about trade credit insurance in Canada and the particularity of our trade credit structure in Canada, which is very different from the US.
Yeah, so thank you, Karine. So we're quite lucky in Canada to have access to our export credit agency, Export and Development Canada, as they're a key provider of credit insurance, which is also known as accounts receivable insurance, all sorts of financing products, guarantee products, capital expenditure guarantee products. So essentially our role at EGR is to help our clients navigate the big beast that is Export Development Canada. As Karine mentioned earlier, the Canadian government's been spending quite a bit to support Canadian businesses and subsidiaries of international business that have firm Canadian operations. So EDC, short for Export Development Canada, received tens of billions of dollars, notably to support the trade credit insurance practice. So in light of the economic context, even before COVID hit, all credit insurance carriers were forecasting rises in bankruptcies, and COVID sort of put the nail in the coffin, if I may. So the number of bankruptcies is on the rise. We are seeing a very sharp increase in claims and claim notifications. So the role of the product is extremely important right now, not only from a risk transfer standpoint, but also from an information collecting standpoint, as many of our clients use it to prospect, to gain insight on their clients' operations and financial stature. So it really is a D&B on steroids, if I may, over and above the insurance capacities that it brings. And also in terms of financing, Karine mentioned that our lending rate is down to 0.25, and one of the key items of credit insurance is that banks can margin up to 90% of receivables as opposed to 60 or 70%, which is fairly typical in terms of lending against receivables. So it has really helped out our clients to navigate this crisis, not only from a collection standpoint, but also from a cash flow and operation standpoint. So I'll turn it back over to Karine, but if you have any questions at the end of this webinar, feel free to reach out afterwards, as it's as you know, over and above the Eulers and the COFASs and all the big players that are also present in the US. EDC is a big player, not only from their direct capacities, but also from a reinsurance standpoint. So if any questions, feel free, as there's quite a lot of interesting materials as it pertains to EDC.
Thanks, Philip. Thanks, Phil. Yes, I did put a few links here to some of the articles with regard to our cyber attacks that we've seen. The ones that make the news are always the most interesting cases, and also the ones where we talk about a cyber attack per se. I just want to point out that cyber risk as a whole, the most claims we've seen are not necessarily attacks from hackers. Most of the time they're human errors. Those claims are not always the most expensive one, but the frequency of those human errors tend to have a tremendous impact on the insurance industry. The ones that do hit the news are usually attached to a ransomware situation. We've all seen them, and sometimes they attack in Canada and the US at the same time. So it's all the same group. They're just targeting financial institutions or healthcare systems, both countries at the same time. So sometimes it's the same wave of attacks that's targeting all countries, well, Canada and the US. And then just by the titles, you can see it's affecting research towards COVID-19. It's also affecting our military schools, our healthcare network, and our school systems also. But enough about COVID-19. I wanted to give you some perspective, not perspective, but some particularity to our Canadian insurance market. So we are very close. Canada and the US are major commercial partners, but insurance runs a little bit different between both countries. In Canada, we have two levels of government, and they govern insurance at those two levels. We have federal government, which is for the whole country and territories, and provincial, which each province will have its own rules and regulations pertaining to insurance. In Canada, it is important to know that some insurance is mandatory when you do business in Canada. So what we call workers' compensation insurance is mandatory in Canada, but it runs very differently than the US. It is all public via the government. Insurance brokers are not involved in this process. So it's usually an enrollment that's done from the Human Resources Department of organizations, or sometimes they go through PEO firms in Canada. We have them also here in Canada, and they will manage the enrollment into the provincial system for each province. And the premium is paid directly from the employee and employers themselves in some cases. And like, as I mentioned, it's mandatory. The other insurance that is also mandatory that needs to be procured by a Canadian insurer when you have to procure this insurance is automobile insurance. It is a mandatory insurance in all provinces, not just for property damage, but mainly for, actually, it's only mandatory for the liability portion. So the damage you cause to a third party, either bodily injury or property damage to a third party. And each province will have minimal requirement ranging from $50,000 all the way to $500,000 Canadian limit. But in the market, most companies and insurer will offer $1 or $2 million limit. We rarely see something below this point. It is permitted to do business with what we call in Canada non-admitted insurance carrier. Non-admitted insurance carrier does not mean excess and surplus line tax as it is in the US. This concept doesn't exist in Canada. An admitted carrier is an insurer that is registered and allowed to do business in Canada. A non-admitted insurer is someone who is not registered in Canada and does business outside of the country. So it's as simple as that. So as I mentioned, we have no excess and surplus line tax in Canada. Not excess and surplus line. We don't have the excess and surplus line market. And I know that this also sometimes generates taxes also at some point, but insurance premiums in Canada are taxable, which is different than in the US. So we want to bring it up because sometimes this is something that just shows up towards the end of the process when we are introduced to US entities and we do all the insurance placement, and then the invoice comes out and then they see a 9% increase on it, and it's because taxes have been applied to it. So each province has different tax rate, and it ranges from none of that, no tax at all, to 9 to 15% tax, depending on the insurance product and the province. I brought here a specific situation that's only applicable to the province of Quebec. And as you can tell from my accent, I am French Canadian. So French is my primary language, English my second language. But Quebec, as a province, has a particularity in its civil code that is, I believe, applicable only to this province. And it's only found in this province across the whole globe. So this particularity in insurance cannot be found anywhere else, where any defense cost incurred by an insurer is always considered to be above the limit of insurance, outside of the limit of insurance of an insurance policy. So regardless of the limit you've purchased as a client, your defense costs are always picked up by your insurer, and there is no limit to how much the insurer will actually end up paying on those defense costs. It was not an issue with insurance carriers in the past. Quebec was not a litigious province, but unfortunately, significant cases occurred in the past few years, and the situation has changed, and we've started to see a lot of lawsuits and class action in Quebec. Well, maybe not a lot, but we start to see a change and a shift, and we've seen some of those. And this has caused a little bit of a pressure on the industry, with insurers quoting risk in Quebec, because premiums were very competitive in the past, and now they're catching up of years of underwritten premium and extreme cost savings that they had procured in the past, and now they have to catch up to those. On the public side, so for companies that are publicly traded, the directors and officers insurance policy sometimes renews at 500% to 600% renewal rate. So it is quite a significant increase. I wanted to bring it up here because it's a very great advantage to the client. Unfortunately, now it's reflecting in the premium. And this situation was not seen before. It was a very, very advantage point for any company trying to do business in Canada to incorporate in Quebec to benefit from this law. And even if insurers actually write in their policy that they want to consider the defense to be part of the policy, they will always lose in court. So this is a strong position to defend and to protect the individuals and the industries against exhaustions of limits on defense. So these are some of the particularities of the insurance market compared to the US. The rest of insurance runs very similarly to what we've seen in the US. Obviously, insurers are not the same. Some of them are exactly the same, but we have Canadian insurers that only do business in Canada. I wanted to end this little information session on our perspective for 2021 and beyond. 2021 is right around the corner, so we kind of know what's going to happen in the first 6 months of the year. We're not expecting most changes in the insurance market. So we're expecting that 2021 will be as difficult as 2020 has been. More than ever, clear communication, collaboration, and strategic planning will be the key to success. Without it, it's clear to us that insurance renewals won't be interesting or fun for anyone. As Philip hinted, unfortunately, we are seeing bankruptcy on the rise. We're already living those moments, and 2021 won't be different. So the positive side to this is we are expecting to see a lot of increase in merger and acquisition activities from the Canadian side, purchasing into the US and vice versa. And we've started seeing it with our own clients. And some US entities are considering acquiring Canada. So at EGR, we have Philip and the rest of our team who are dedicated to support in those processes with regards to due diligence of at least providing a Canadian perspective on the insurance program of companies you guys are targeting to acquire, and an opinion on the insurance program as a whole, and also support you with all the other insurance products that are available part of those transactions. Particular attention to pay with regards to cyber, crime, property insurance, in particularity with the business interruption component. Directors and officers in trade credit, we think that these are the insurance policy and market to follow in 2021. We're expecting a lot of changes and risk appetite also from insurers. It's not clear yet what our post-pandemic stimulus plan will be. The government has not made that fully public just yet, but there has been a lot of information and press conferences from our government hinting that it will be geared up toward the renewable energy sector. So I wanted to mention it because it is quite important to know if organization and considering doing business in Canada, that some sectors will benefit from strong investment from the federal and provincial government in terms of boosting the economy. As I mentioned at the beginning of the presentation, we're expecting taxes to increase. Taxes were already high in Canada. It's well known. It's not, we're being taxed quite a lot, and we're expecting those to increase over the next years. Our interest rate, as we mentioned, is currently at 0.25%, and it has been confirmed that the plan is not to increase it until 2023. The Bank of Canada has made this pretty clear that this is aligned with the plan to maintain the economy going and to not put too much pressure on our inflation rates. And so those interest rates are not to be touched until at least 2022. So this concluded the information we wanted to share with you today with the Canadian insurance market status. As I mentioned at the beginning of the presentation, EGR solely specialize on property and casualty insurance. We do not offer employee benefit services, but we do have some information to share on the Canadian situation at this point. And it is a very, very challenging market at this point. A lot of employers are spending a lot of time and resources, as our own employers are at the present time, focusing a lot on mental health and how to support employees that are feeling the isolation of working from home or the uncertainty towards the futures. As I mentioned, Quebec and Ontario are heavily confined. Not all provinces are following such a confinement status at this point because the cases are quite low in some parts of the provinces. One of our territories actually has 0 cases of COVID. So one of the only places where it's very difficult to actually go there. But if you're there, there's no case, no cases at all. So with regards to employee benefit, a lot of investment is done towards all the extra services that employers can support at a distance for their employees with regards to employee benefit. So all the mental health hotlines, services, anything that can avoid you from going to see your doctors also. So all the telemedicine support organization and companies are quite heavily pressured and used at to their utmost capacity in terms of what they can support. Those services, sometimes the employers offer them freely of charge to the employees, so they become a charge to the employers themselves. And those services are getting more and more expensive as COVID stays around longer. So we're expecting that the insurers and service providers are being stressed to the maximum of their support at this point. And same thing with the insurance premiums are quite challenged to go on the increase for 2021. So again, not always the easiest insurance market on that front also, for Canada, at least.
Awesome. Thank you, Karine and Philip. Does any of the attendees have any questions that they would like to get asked? You can throw them in the chat box or raise your hand and I can unmute you. And then also, like, the goal for this presentation, we really wanted just to let everybody know just the top insurance things when doing that business in Canada. So if you did have any questions, you can come to Sterling and we can pair up with EGR and, answer those questions for you and then help your business grow if they are looking to move into Canada. So if you do have any questions, you can throw them in the chat box. I'm not seeing any yet, but we will send out this presentation. We thank everybody for coming in on this. And then if you do have questions, you can ask them to me and I can direct them over to who they need to go to. But other than that, that was everything. So I hope everybody has a great day and thank you all who have joined me.
Thank you, Julie. Thanks, everyone. Thanks, Bill.
Thanks, Bill, Joe, and Julie for organizing all of this.